All right, folks, how can you make $5,000 a week with stock or within the stock market? All right, let me break it down for you because the most important thing is knowing that in order to make $5,000 a week, you need to make what, if you're breaking down by 20 days, 20 days being, every single day that the stock market is open or any, trading day or business day in the stock market, right? So that is 20. Now, let's divide 5,000 by 20. That will be something a little bit over $225 a day, all right? So you have to make $225 a day in order to make $5,000 per month trading stocks. Now, by saying trading stocks, it might scare a lot of you or some of you, but trading stocks doesn't have to be something that will require you a lot of time and a lot of money, because usually those two, time and money, are most of the two things that you need in terms of resources, in order to put in the work you need to put in to get those results. Now, if I try to take first the capital, the money, all right, the money aspect of it, how much money do you need to start making $5,000 a week? All right, let's break it down. It's really about a percentage, because if you switch things around, it's about a percentage. And by percentage, I mean, if you take, how much capital is 1% of it giving me $225 every single day? All right. Now that will be something around maybe $20,000, right? 20,000 by doing a quick math. So if you have $20,000 cash money that you put into a brokerage account, all right, you can expect to have 1% gain or 1%, 1% green day on all of the millions of stocks that are out there. How realistic is that? Well, very realistic. Why? Because you don't have to trade every stock in the market. You don't have to trade, you don't have to have 50 million stocks on your watch list. You only need to focus on maybe 2 or 3 top, right? Because that's what I do. By doing so, it gives you to focus more on everything that is coming from, what the company is issuing, where the outlook of the company is going, but also what the chart is telling you by looking at the chart, by looking at, the price that I'm seeing now at this company, it's very, 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 very undervalued. Meaning, when you look at what the company is pushing or producing as what we call cash flow or margin, operating margin, meaning how much money the company is putting every single quarter, every single month, based on the assets, valuing all the company and everything, the share price that we're having now, it's way less. Like maybe, just to give you a quick example, all right? If I tell you that Apple is trading at $50 a share, what we will say? It's very undervalued, right? Meaning Apple, with everything as a business, as a customers, as the products that they have and what they're selling every single month and year, it is very, very, very undervalued to see Apple trading at $50 a share. So when the price drops to a certain level, given the price target that the analysts are giving, you can have that, swings. The swings are literally what, we see on the chart every single day. I'm talking about the market here. It goes, if you take today, for example, it went down, up, down, up, up, down, up, down, up. How many times? 1, 2, 3, 4, 5, 6, 7, 8, 9 times during the day. 9 times during the day. Yesterday, it was even more obvious and the swings were even larger because at some point it dipped to 450 points and at the other points it was trading in the green, 120 points. That is only the Dow Jones. You can do the exact same analysis with the S&P 500 and with the Nasdaq or the Russell 2000 or any other stocks out there. Now my point is going back to, how much capital. With 20,000, it may sound a lot for some of you, but break down, if I only have 2,000, all right, or if I only have 10,000, or if I only have 5,000, 0.5% of that, 0.5% of that, how much is it gonna give me depending on the price of the stock that I'm willing to trade, all right? But if I don't have the time to actually focus on all of these, tracking every single thing of the company, I can only or simply trade the entire market. And that way, I can be pretty sure that I can catch all of these waves, all of these waves, So this is the Dow Jones. You can do the exact same thing with the S&P 500 or the SPY. This is an index fund, And if you don't want to do the exact same thing, you can do this with QQQQ, for example, which represents the Nasdaq. Now, you will tell me, AC, this is a $300 ETF, or the SPY is a $400 ETF. Well, the good news is with Schwab and with other accounts, other brokerage platforms, you can do what we call fractional shares, meaning you can buy a company, you can buy a stock like Tesla, or the entire market with the S&P 500 worth 900 or 2,000 for Amazon. You can actually trade them with at least $5. So you can buy a piece or a fraction of those companies with whatever fraction of money, or amount you can afford. You can afford into your brokerage account, but you have to keep in mind that if you do, and the smaller your capital, the bigger you will have to actually trade in order to catch these waves. Because back to the Dow Jones, for example, if you bought here and sold here and bought here and sold here, all right, stayed here and then sold here again, bought here, sold here, bought here, sold here, you would have actually made 1% on the day, even trading with less than $20,000, or maybe a tenth of $20,000. But that will require you to trade 4 times and to have a lot more time. So depending on your, how much time you do have on the day, if you think this is something you can do, then go for it. But if you don't have time, then if you can allow a bigger capital, then you only need to buy here and maybe sell here, and that's it. All right. And then repeat the exact same thing tomorrow. Or if you have a little bit more time, jump into another asset, maybe the SPY, because we also have these swings, and then repeat the exact same thing, the next day and the next day and the day after. You won't gain every single day, but at least as you learn and educate yourself with consistency, you will get more, consistent with your profits, because that is the main thing, trading or swing trading, which is pretty much more efficient when it comes to me, for example, because I'm really, really busy during the day. I find it more, that the most important thing, in these trading stocks or swing trading stocks in the market is really about protecting your money, because there are going to be some days where there is no direction. You don't know if it's the right time to sell, the right time to buy. You're kind of lost, and it, even for professional traders, for the smart money, is the exact same thing. So the best thing for you will be just to keep the money on the sidelines. So hopefully this brings you value, and if that is the case, please consider giving me a thumbs up and subscribing to the channel for more, valuable information like this. I'll see you in the next video.